Year 2011 has been a tough year for Indian equity markets. For the current year, India has emerged as one of the worst performing emerging markets in the entire region. But come 2012, will things change, or the bad will get ugly before it gets better? Discuss that on this edition of Crystal Gazing 2012. I have with me Mr. Raamdeo Agrawal, Joint Managing Director of Motilal Oswal Financials. What a delight to have you back on ETNR, Mr. Agrawal. Pleasure as always. 2011, like I said in my opening remark, has been a tough year for Indian equity investors. Has this year shaken a long-term investor like you as well?
No, it has been quite quite challenging. Continuously it had been negatively surprising us, but it doesn't challenge you as an investor. In fact, it should bring out the best out of us, because we have seen markets of late 80s. We have seen markets post Harshad Mehta in 95, 96, when 2002-3 post .com burst. I think particularly 2002-3 was very, very trying. So I think it's quite fair to have this kind of up and down. Now, having seen about 20-25% kind of down 2011, what is there in store for 2012? That's a big question mark. And of course, things are not looking too rosy. Nothing seems to be right at this juncture. 14 months back, Diwali 2010, everything was right. India was shining. Probably India is stinking right now in everybody's eyes. Growth rates are falling. Fiscal is looking so challenging. There's all of our corruption issues are being tackled. Government is not there is a policy paralysis. So I think everything has gone wrong as far as India's story is concerned at this juncture. But corporate earnings have held on. Broadly it has held on. We have the highest interest rate. Now global growth is slowing down. So my sense is that 2012 is starting a challenging environment. But if you give 2-3 quarters, hopefully in the second half of 2012, there could be a surprise. One, I think the big surprise will be the recovery in US. That I think will change the outlook about the world economy and the kind of complete depressing thing which is there. That should be lifted somewhat, and that one thing changes a lot of things for the world equity markets and world business per se. So that is one thing which one should be watching very carefully. Second is that how exactly the inflation plays out in India. What would be the importance for anybody, but high inflation restricts the policy flexibility at the end of policymakers. So if these two things happen, more particularly the inflation part of it comes to normal 5-6%, I think there will be a lot of flexibility, a lot of pending policies will get through, and maybe we'll start pushing for growth. So in second half, you'll see some kind of a response to the policy initiatives for the renewed growth in the economy, a little more optimism in the second half, and hopefully if the world economy is in somewhat better shape, combination of these two should see 12 months henceforth much better days than what we have today.
When we started the year 2011, Mr. Agrawal, the popular macro global trade was short dollar, long emerging markets, long currency, and long commodities. Now the popular trade is long dollar, short emerging markets. Do you think by 2012, end of 2012, this trade could reverse again? It's quite ironical if you look back.
Yeah, I don't do these trades, nor do I think about them. So it is very difficult for me to say anything about this kind of trades. But a lot of things will change, I can tell you. What is right today? We never thought that we'll be in such a bad shape just 12 months henceforth. If you had asked me at the beginning of 2011 that what would be the shape of it, index was still 20,000 plus. Almost we were all-time high on at the beginning of the year, last year. And through the year, despite bumper monsoon, you have 20%, 25% decline in the index, and so much of pessimism has set in. So 12 months is a long period in the markets. A lot of things will change, and it will change in next 12 months.
But what makes you so sure that things will change on the upside? Things will change for better. The current bad will not get ugly before it gets better.
Yeah, that possibility is always there, that things as it is drifting even now can drift a little more, and may become worse for some more time. You have UP elections coming in, you have an Hazara movement going on right now, and Parliament looks to be in complete confusion what to do, whether to pass the Lokpal bill, not to pass the Lokpal, so in what shape it is going to pass through. So there are a lot of things happening, but we have seen so much of negativity that it's fair to expect in terms of probabilistic term that in next 12 months we are going to be more positive than negative in what we have seen in last 12 months.
What about risk versus reward, or valuation versus growth? Do you think the risk reward ratio currently is loaded in favor of going long?
I can tell you one thing, this is a buyer's market. As far as the stock market is concerned, now it is no more seller's market. If you want to buy a million pieces of any stock, you get discount. So this is a buyer's market, clearly. Now can it become even more cheaper? My sense is that market may not go down much, but the earnings growth may not be reflecting in the stock price, and hence the valuations will go worse. Valuations will become more attractive in next 3, 4, 5 months, because for markets to actually reverse, there has to be something big happening. Either earnings must reverse, or some political event must happen. Some economic thing should happen which will simply change the attitude of the investors to come back to the market rather than running away from the market.
But if none of the following happens, which is globally growth remains still muted, locally we don't see too much of reforms, and if commodity prices they still remain high, what happens in that kind of a scenario?
It is very difficult to see what all will happen. I am telling you, it will surprise you. The things will happen which is not, you have not even mentioned those things which will happen in next 3 months, 4 months, 5 months. As I said, what could be the pace of US recovery? You don't know. US economy may recover at whatever 1.5%, 2%, 3%, but nobody can stop the market from recovering at some rapid pace. It's a market which is stuck for 10 years at this 13, 14,000, 12,000 or so. It can recover very rapidly. Zero interest rate, huge corporate profits, huge liquidity. People are sitting on the fence big time, and the 10-year yield is half of dividend yield on the Dow. It has never happened. So my sense is that it is a perfect backdrop for a huge rally in US markets. It sounds a little speculative, but that's how it looks to be.
But Dow has been one of the best performing index this year.
Yeah. So so what happens is, once US markets start recovering and US economy starts recovering, that can change a lot of things for the other parts of the world.
Will it change perception for EMs as well? Because the EM thesis has been globally DMs are slowing down, and it's time to look at islands of high growth and go for India and China, because these economies they offer high growth. If US economy bounces back, is that bad news for us? Because then the allocation to India may just reduce.
No, I don't think so. I think one other thing I see, I'm not a global investor, nor we do interact with some people, but my sense is that the growth differential between India, China and rest of the world, particularly developed world, is permanently there. Whether we are at 7% or whether we are at 9%, those guys are not going to be beyond 2.5%, 3%. So that growth differential is going to be there, and they would like to invest in growth for longer term, and that's why you see, despite all this trouble this year, we have not seen major outflow of FIs. So methodically, I met some funds. They said, in the longer run, we are seeing India allocation increasing in their portfolio. It might be slower. When things are not looking good, they may not allocate more. But if you ask them 10 years henceforth, 2020, they'll have significantly higher allocation in India than what they have today. So India is underweight in a lot of these pension funds and all. So in fact, I am getting to see a lot of these large pension funds visiting India and trying to see how they can increase allocation and at least find the managers and things like that.